Hello everyone, thanks for listening to the Finance Leadership Podcast, produced by AICPA and CIMA together as the Association of International Certified Professional Accountants. You can find out more at aicpa-cima.com. So today we're here to talk about the ESG space and how it affects the world of accounting and business. And today I've got two fantastic guests for you, Jeremy Osborn and Simon Bittlestone. So, Jeremy, if I could start with you, please, could you tell us about what your role is currently and a little bit about your career to date?
Great. Well, thanks, Kevin, for inviting me to join this podcast. I'm Jeremy Osborn. I'm the Global Head of Sustainability for AICPA and CIMA. I've been a member of CIMA for the last 20 years or so and a fellow the last dozen. I've spent most of my career working in strategy consultancy and sustainability consultancy with some of the world's largest professional services firms. And I have a real interest in how businesses are integrating sustainable practices into their operations and processes and supporting the transition, particularly to net zero. I cut my teeth earlier in my career at the beginning with Unilever, of course, an old friend of CIMA's. And so I've always been interested in the link between sustainability performance and commercial performance of the entity. Now, I very much look forward to our discussion.
Great, thanks, Jeremy. And Simon, if you could do likewise, please.
Thanks, Kevin, and likewise delighted to be on the podcast. And hi, Jeremy. So I'm the incoming president of CIMA, and I'm on the board of the association that oversees both CIMA and AICPA in the US. Outside of that, my main role is partner at Plumtree Capital, which is a private credit firm focused very much on providing liquidity to businesses in the UK and the US mid-market. And I have a handful of other advisory and non-executive roles alongside that, and both to businesses and charities. In terms of my sort of broader background, obviously I'm a very proud management accountant by qualification, and I've spent the majority of my 20-year career in technology and technology businesses, including about a decade running a financial analytics business, which I had the privilege of seeing sort of firsthand some of the challenges that large businesses in particular were really grappling with from a data perspective when it comes to the sustainability challenge that we're discussing today and that is so important and topical.
Thanks, Simon. So obviously ESG is a massive topic everywhere at the minute, and anyone who hasn't heard of it probably shouldn't be in business, to be quite frank. It's a really important topic for business at the moment. And obviously, I think we've got two very strong people here to have this conversation today. So guys, thank you for taking the time. So Jeremy, what do you think are the key things driving the sustainability agenda right now?
So I think the most important driver of sustainable business is policy at a regional or a national level. Simon and I are both based in the UK, and I think it's helpful to think about what's going on close to home. So probably the most important policy anywhere in the world is the EU Green Deal in the context of sustainable business. And the EU Green Deal, which is essentially a means of transitioning the EU economy towards a net zero economy, i.e. one in which carbon emissions released by business and industry are reduced to the absolute minimum that can be done over a multi-decade period, and really we're talking through to 2050, is shaping the business agenda vis-a-vis sustainability. Now, once policy is in place, then regulation tends to follow. That's why, for example, for anybody listening, perhaps they are an EU-based entity or they have operations in the EU, we have the EU Sustainability Reporting Standards, or the EU ESRSs, as they're referred to. They came into effect on the 1st of January this year, and they determine what businesses must report in order for national governments, and then ultimately that of course ratchets up at a regional level, to understand how effectively the economy is transitioning towards net zero. So that's the first thing. In the UK, we have the UK has its own government policy. It's very similar to the EU Green Deal. We see sort of variations of this around the world. So I think number one is policy. Number two is decisions which individual businesses are making around what they may need to do in response to the risks and the opportunities that the transition towards net zero creates from them. There's a lot of talk in the press about the risks of the net zero transition. So the physical risk, for example, to an organization from climate change, as well as the risks that a business might pose through its operations, through its value chain, through its products and its services on the environment. And of course, that has an impact on society as well. But it's really important to remember that this is also a huge opportunity for many organizations. So if one thinks, for example, about maybe the automobile industry, which obviously in particular EU countries is a very significant contributor to GDP. So the electrification of automobiles is a massive opportunity for companies. And I'm sure we've all read of examples of well-known car marques that have committed towards ending production of the internal combustion engine and fully electrifying their fleet. So that's a huge opportunity. It's a new market. One might think of, for example, the market for offshore wind turbines, not just the production of the turbines, but the actual installation of them and the huge resources that's required to create offshore wind farms and the expertise that creates and the opportunity for job creation, etc. So I think that, for me, is the second area. And then, of course, for businesses to make that transition, they need the funding. And we're seeing a massive investment, a massive flow of capital towards sustainable business models. And this comes with a benefit to those organizations that can demonstrate that they have an underlying business model which is sustainable in terms of access to capital, the cost of capital may reduce, et cetera, et cetera. I'm sure Simon will expand more on that. But the investment that's required for an economy or at a national, a regional or global level transition towards net zero is absolutely huge. There's a study by McKinsey that suggests that the incremental investment that's required just in physical assets to support effectively the systems change that this is all about through to 2050, and that's a date one often hears of in the context of the transition to net zero, is it could be as much as $9 trillion per annum. So that's a huge amount of money. And of course, the funding is increasingly likely to flow towards organizations that are part and parcel of that transition. So I think the third area is around investment flows. And of course, the regulation, such as the EU standards I mentioned earlier, is partly there to provide investors with decision useful information that they can work with. And there's the International Sustainability Standards Board developing standards at a global level. So I think those are the three key areas. Very different from what I experienced earlier in my career when I first started working in this area about 15 years ago, when it was very much down to the whim of an individual executive as to whether they felt that this was a personal passion of theirs. Perhaps they were approaching retirement and they really wanted sustainable business practices to be part of the legacy that they would leave behind for those following. That sense of it's the right thing to do, which one heard a lot sort of 15 years ago, is much less voluble now. It's much more, this is the essential thing to do if we are to survive as a business, and all of the policy, all of the regulation supports that.
Very powerful insight. Thank you, Jeremy. I think that very succinctly articulates this has become a must rather than a nice to have at this point for businesses. So from a business perspective, Simon, why does it matter?
So I want to build on some of what I describe as Jeremy's cautiously, and I'm sure he won't mind me saying, somewhat uncharacteristically optimistic comments in my answer here, because I really do feel that it hugely matters to business. And I feel that from a business perspective, we honestly are approaching a tipping point. And when we hit tipping points, change happens very, very quickly. Excuse me. Let me explain why. I think for a long time, while most senior executives have acknowledged that sustainability was obviously a moral obligation, the targets to take action were still a long way off, and stakeholder pressure, frankly, could often be managed through a good PR strategy. And I think that is changing, and it is fundamentally driven by three things, many of which Jeremy covered in his answer. The first, let's look at the actual timing of carbon reduction targets. The median corporate has a target of 2030 to take action on its Scope 1 and Scope 2 emissions. When you combine that with our understanding of the average tenure of a CEO, so the average tenure of a FTSE 100 CEO is about 5 years. Understandably, as those two windows start to converge, change will pick up pace. And quite frankly, nothing focuses the mind in business more than bonus-related targets, and that's what these will become. So I think we're entering the window in which senior executives will feel a very personal focus on driving the change and the action required on Scope 1 and Scope 2. The second point is very much the point that Jeremy's covered, that the increase in disclosure, and particularly actually the convergence of disclosure frameworks from what were probably significantly more than 10 only 5-6 years ago to the 2 to 3 we have today, and these becoming obligatory. In other words, obfuscation is no longer really an option. But I think the third, and the one I really want to talk about for a bit longer, is the market forces behind this. These are obviously all driven by stakeholder pressures, and specifically for businesses, that's consumers, that's investors, and that's employees. And let's look at each of these. So again, for a long time, there was a widespread belief, I think, in corporations that while consumers talk the talk, they didn't really walk the walk, with executives claiming that more sustainable product lines were more expensive and didn't actually then appear to generate higher sales. Interestingly, and very importantly, that argument, I think, has very much been put to bed in a big piece of work by McKinsey and Nielsen IQ only last year, where they looked at dollars spent in the US over 5 years through to 2022. They found that products making ESG-related claims achieved 6.4% compound annual growth rate versus only 4.7% for those that made no such claims. And while that doesn't feel like a big number, compounded it really is. And in the world of the highly sort of competitive consumer product area, that is a really big difference. Investor pressure, it's a little bit more of a mixed bag for me. I think there's been a massive increase clearly in ESG focus by investors today. You have nearly 25% of total global financial assets managed by signatories of the Principles for Responsible Investing, for example. What isn't as obvious, though, is those groups really driving meaningful change in business practices. You take another high-profile investor group such as Climate Action 100 Plus, that represents still about 13-14% of total assets. They have some very bold goals, but despite having real power to influence some of these corporations, they very, very rarely actually use probably their biggest weapon in their arsenal, which is voting against the board of directors when companies continue to pollute and refuse to really act on the goals presented. But I think, again, cautiously optimistic as we enter phase 2 and as we're looking at 2030 on the horizon and the requirement to really take action, that pressure could really ramp up. And one shouldn't also overlook the small but very exciting opportunity for financing these days for businesses that qualify from green financing and impact investing, both of which very small, probably significantly under, I think, 1% of total financial assets, but rising very, very quickly, and often offer businesses a much lower cost of capital, actually, for projects that meet the need. So those two, I think, are key, investors and consumers. The one that I would pick out, though, is the most important here is actually the attraction of talent, and particularly of the younger generation. So, I mean, in a recent survey, 8 in 10 millennials say that responsible and ethical business practices are very important to them when choosing an employer. And I don't know if either of you know this, but they will make up 40% of the workforce next year in the UK. That is a really very large number. But perhaps, Kevin, you're the CEO that says, well, who cares? I'm focused on the 60%. Well, Kevin, let me tell you something else. Another 23% of that workforce is Gen Z. And if you think the millennials are focused on more than just pay, Gen Z are the least pay-orientated generation yet, and the most passionate about purpose, about belief and meaning, and driving an impact in the choices they make for the employers they work for. So really, there is nowhere to hide on ESG when it comes to attracting talent. And businesses that lose the war of talent will simply lose competitivity in the long run. So a very long answer to your question, but I think it matters a great deal. And I think the pressure is now really being felt very, very keenly by executives, and we're very close to seeing meaningful action in the business world.
So, I think you've raised a really interesting point there around generational change. So there's a recent study by EY on what motivates young sort of college kids to enter the accountancy profession. And they say they want three things. So these are young adults who are considering what to do. Number one, they want to feel they've got a respectable career that's going to generate a lifetime's worth of earnings. Number two, they feel they want to make a difference in the world. And number three, they want to do a job that will allow them to contribute towards mitigating the impacts of climate change. So I think that's exactly the point you've made, just narrowed down to the profession that many people listening to this podcast will be a part of. So really interesting point there. And I think I really like your comment about the average sort of tenure of the C-suite, because I know over time that's got shorter and shorter. And this raises broader questions about what can you achieve when your tenure at the top is a relatively short period of time. But particularly in the context of this multi-generational, multi-decade transition, that does become a real issue. And I think your comment, if one juxtaposes that with consumer choice around products and services, I wonder if what that means is that actually the consumer, whether that's business to straight to customers or it's business to business selling, actually will become very influential in persuading the C-suite that even though they may not still be imposed by the time their ambitions are realized, that if they want to ensure that for their successors in those top spots, there's an ongoing business with their customers, that having products and services that can demonstrate that they are themselves sustainable becomes ever more important.
I think that's a great point. And I think that to add to that, I think the other dynamic that we're seeing as well, when you look at the broader economy, we have a real cost of living challenge at the moment. And one might say, well, that will put pressure on the sustainability agenda, with sustainable goods typically costing a premium. But actually what studies have shown, I think it's a Deloitte study of early this year or late last year, is that in that environment, while there is cost pressure, we're also seeing consumers choose not to buy or to repair or to buy secondhand. That those pressures will simply continue to squeeze the market and create even more competition. And I think ultimately, yes, I agree with the point you're making. All of these things will have to and will work in either a virtuous or vicious cycle. And that will be the challenge for CEOs. Which do they want to be, the virtuous or the vicious?
Two great contributions in terms of a holistic answer. Yes, albeit, but there's so much to pack in there. One of the questions I was going to ask was around why should our students and members get involved in ESG? You've largely answered most of it, but I guess one of the key things just to note is quite a large section of our listener base to this podcast are students who are currently studying for their CGMA qualification. And I guess everything you've said becomes very apparent that the ESG agenda is here. It's here to stay. And it's actually, if anything, one of the fastest growing areas in accounting that we see today. But what I would probably do is ask you, Jeremy, what type of career paths might one forge in this area? If you were, for example, finishing your strategic level and thinking about this could be something of interest to me, like what careers are out there at the moment, and what are we seeing in the market?
As you said, Kevin, this is a rapidly evolving area, and one of tremendous opportunity for anybody who perhaps is at an early phase of their career. Accountancy is remarkably good at evolving over time. We've, as a profession, in one form or another, we've weathered the storms of economic and social change over the best part of 500 years. And in my view, this is one such change. As Simon has said, it is transformative. This is not sort of incremental change, which an awful lot of business activity can be about. This is actually transformative. And this happens, in my view, about once every few generations. It's probably the most significant change we've seen for the best part of 100 years. And that creates opportunities for those who have the skills as an accountant. Now, One of the things that I've been doing over the last few months is talking with different senior executives from various different companies in different industries to understand how sustainability is shaping the nature of the work that the finance and accounting team does within business and industry and the shape of that team. And what's clear from that is that there is a new career path. My sense is that it runs in parallel with the traditional route through to, say, financial controller, financial director, and CFO. And it's a route that really is only open to those who are accountants. And it leads to jobs with a slightly different job title. So what we're beginning to see is job titles such as the sustainability controller, the sustainability CFO, the sustainability finance manager. Now, the description of these jobs is important because you can see from the names of these jobs that they are traditional financial and accountancy type jobs, but with a focus on sustainability. So, for example, AICPA and CIMA were the principal sponsors of the International Sustainability Standard Board Symposium in New York in February 2024. And there was a senior executive from Bank of America. He reports through to the CEO, and his job title was the sustainability controller. Now, I believe his career path was one of traditional finance and accounting. He's no doubt a CPA. But what it illustrates is that there are jobs at the very top of organizations now which require a mix of sustainability and accountancy. So for students who are close to qualifying, as you said, that perhaps they're on the strategic level and they're looking to earn their stripes and perhaps step into their first management role, my suggestion would be have a look around and see whether there are pockets within your broader finance teams of people who are beginning to be given responsibility for perhaps reporting against the new EU sustainability reporting standards or the new international sustainability reporting standards that the ISSB released last year. I suspect for most people working in large organizations, there will be a microcosm within your finance team that has been asked to do this. And that's a good indicator that there will be a very rich and rewarding career path. If I was at the beginning of my career, I've always had an interest in this area. I think I would be hunting out those roles and looking to forge a career that ultimately might lead through to a sustainability CFO role, even if that role doesn't yet exist, because probably over the course of my career, say over the next, 15, 20 years, that role would come into existence. And if I have been beavering away in similar roles at a more junior level throughout that time, then I would be very well positioned to apply for that senior role in the fullness of time. So I think it's a great time. I think it's as I said, it's another example of how the profession evolves and accommodates change. But just to draw back to Simon's point, that this is about transformative change rather than incremental change. And that, I think, is why sustainability or sustainable business will have such a profound impact on the nature of the profession and therefore structurally on the types of roles which are available and will become available over time.
And Simon, do you see the businesses changing the roles, changing their responsibilities to accommodate and meet their obligations in this space?
I think we are seeing sustainability functions and workload move from sustainability functions into finance teams, yes. And I think that when we look at sustainable strategies, we're clearly seeing companies now start to move towards implementation. And all of these are a good thing. You know, absolutely finance should own the opportunity here to drive it, to own it and really make a difference. I think in reality, when you look at where businesses are, you know, most companies' sustainability plans really are not much more than a bullet point list of, you know, potential future actions, quite frankly, with really quite a long way to go to understand how they'll actually achieve it. And this is not just, it's important we say this is not just on decarbonisation, which is obviously a really challenging part of it, but also, frankly, on DEI, on fair wages and general improvements in governance where needed. You know, the next step for businesses, they've got to plan those in detail, they've got to cost them, and then they've got to make sure they're understood by boards and the impacts that they then achieve are monitored and reported properly. And this is where I think I'd pick out and just reinforce some of the points that Jeremy has just made. I think there is a massive opportunity here for accountants and specifically for management accountants. There is a significant human capital deficit in the economy to be able to achieve real sustainable change and to achieve the changes in business that we just talked about. If you look at staff between, say, the average finance department today and the sustainability department, you will typically see 2 orders of magnitude more in the finance function. And you may argue there's a lot of work to do in the finance function. There is, but sustainability is probably a more complex and challenging topic. So the pressure is going to increase on finance functions, and CFOs are going to need help very, very fast as these deadlines start to turn around the corner. I think that when you look at the management accountant, they've got all of the core skills to support the business changes that are needed, specifically the skills around analysis and communication. I would strongly urge management accountants, as Jeremy said, to amplify those with a deeper understanding of ESG. The broader association has actually just released a fantastic course in partnership with the Oxford Side Business School called ESG and Sustainable Financial Strategy, which I've done myself and I would hugely recommend. And there are many other good courses out there. And grasping that, this is an enormous career opportunity for accountants, not just to make a difference to businesses, but frankly to the world as a whole. So I think it's a huge, huge opportunity for accountants.
And that sort of leads me into my final question to you yourself, Jeremy. Obviously, Simon's touched on there the fact that we have the core skills as management accountants to take this challenge by the horns and all this on behalf of businesses. Quite clearly, we're very adaptable and have transformed the profession as needed. But for those students out there that we teach and for the members, the impacts on obviously learning and CPD, this is a really core area where people need to really brush up and hone their skills further to keep track of what's going on in the space. Any commentary on that or any views?
Just to pick up on what Simon said, management accountants really do have the skills to make a difference in this area. Simon is correct that the underlying issues that sustainable business is dealing with are very complex, and they are issues that can only be dealt with really at a systemic level. If one thinks about, as Simon has alluded to, improving governance structures, well, arguably that could be dealt with at an organizational level, but say human rights within a supply chain or carbon emissions, these are issues which are complicated and often global in nature. But what the accountant brings to the table is the underlying discipline around how to respond to these issues, how to understand what they are, to measure, perhaps achieve a baseline of an organization's current performance against them, to bring the discipline around target setting, measuring progress towards that, integrating it in strategy, communicating that internally through the management accounts, communicating it externally to investors and other significant stakeholders, etc. They're all the core things that management accountants are doing anyway, day to day in the context of financial information. And I think the competitive advantage that the accountant has is that we're not expecting accountants to become subject matter experts in, for example, climate science or the moral, ethical, legal issues around human rights, for example, in supply chains. We're asking management accountants to understand the issues well enough that they can then manage all the other stuff that I've just mentioned. And I think the competitive advantage is that it's easier for a management accountant to pick up the basics of the sustainability issues and integrate those into the core processes that they're overseeing than it is for the sustainability professional to pick up the basics of what the accountant does, because what we do is really quite complex, it's quite technical, and it takes a lot of experience to really understand what we're doing and why we're doing it. I think that's of advantage to the accountant. How can we support accountants with that? Well, as Simon said, we have a partnership with the University of Oxford Side Business School. We have a fantastic course. We're delighted that Simon and others have been able to do it on ESG and sustainable financial strategy, which really aims to provide those who take the course with an overview of why sustainability and business go hand in hand. We also have other means of supporting CPD and professional development. So we have a certificate in ESG, which is, I think it's 10 hours or so of online learning. We have great thought leadership that our team produces, and it's very up to date. I really recommend you go and have a look at our website under the sustainability pages, the ESG pages, and browse the thought leadership. For those who would like a deep dive around some of the sustainability accounting standards, we've teamed up with the IFRS Foundation to offer the fundamentals of sustainability accounting credential. It's a very well-respected international credential to members and students at a slight discount from the regular price. So we have an expanding portfolio of products, and shortly we're hoping to be able to offer e-learning modules specifically on the EU sustainability reporting standards, and they'll be really great once we make those available on the association website. So we're doing everything we can to make sure that there's a wide range of products within the sustainability / ESG portfolio. And so I would again recommend anybody listening to this for whom we've piqued their interest to have a look at what we have online and browse the products and see if there's something that might be helpful for you as an individual in the context of wherever you want to take your professional development.
Yeah, and obviously goes without saying, Jeremy, but a lot of our ESG content becomes part of our syllabus, which will only increase as more and more of this becomes relevant to business and the world of accounting. So for anyone there currently a student, this may, obviously some of this may sound like CPD for a later time, but this stuff is really relevant now. So we'd encourage students to become very aware of the regulations, the standards, etc., and the impacts it has on business, because it's such an important area and only growing exponentially as we've addressed throughout the podcast. Okay, so I think we'll draw the podcast to a conclusion, and I think obviously we've had a very deep insight to the agenda, how it affects business, the career paths that are out there, how people can make a success in this space. Clearly, it goes without saying, this is very obvious to anyone starting their career. This is an area where you can really excel if you get to grips very quickly with this, and it's only going to grow. And we've seen huge changes in the jobs, the responsibilities, and in the same way, maybe 20, 30 years ago, where new job titles came along that accountants fulfilled, like CIO, CTO, for example. So a very interesting and detailed discussion. I appreciate your time, both of you, and taking the time out to talk to us today. I think the insight you provided is very, very important and very valuable to our students and members. Okay, so thank you, Jeremy. Thank you, Simon, for your time. Appreciate it.
Thanks, Kevin.
Thanks, Kevin.
There's plenty more to explore about the topic, as Jeremy and Simon have pointed out, on our website and also our show notes. We'll have links to all the resources we've mentioned. To view them, just click on the episode's info icon in your podcast app on your smartphone or tablet, or open the episode in your computer's web browser. You'll find everything right there. For more information on the Finance Leadership Programme, go to enroll.cgma.org or search for FLP on the AICPA website. Thanks again for listening, everyone. Appreciate you taking the time to listen to the podcast. If you have a friend or colleague who could use this information, feel free to share it with your networks. Goodbye.
This content is designed to provide illustrative information with respect to the subject matter covered, and does not represent an official opinion or position of the AICPA, the Association, or CIMA. It is provided with the understanding that they are not engaged in offering legal, accounting, or other professional services. If such advice or expert assistance is required, the services of a competent professional person should be sought. The AICPA, the Association, and CIMA make no representations, warranties, or guarantees as to, and assume no responsibility for, the content or application of the material contained herein, and especially disclaim all liability for any damages arising out of the use of, reference to, or reliance on such material.